All right, good morning, everyone. It is 8:37 on the morning of November 3rd, 2022, and this is my pre-market strategy session. So, title of today's video is Fed, as in the Federal Reserve, remains. Okay, it looks like it's up and running again. All right, my internet went out for a little bit there. All right, so essentially, what we've got is a narrative was building over the past few days that there are going to be a whole bunch of things that are going to make the market go up. And it's not the case, not at all. And so here we are. Let's see, from this recent high here on the 25th of October to yesterday's close is a negative 6.6%. Almost 6.7% down move, and we'll be opening even lower than that. Let's see, from there to where if we opened up right now, be negative 7.75%. And so yeah, it's here, and this is the neckline. This is the path. This is the general trend of the Qs for the next 6 to 12 months. And I imagine at some point, fairly soon, it's going to drop back below. It's going to drop down below this neckline right here. Price action is, and then it's going to stay below. And then this neckline will be resistance for a foreseeable time. Here's an example that I like to point to quite often. This is Alibaba Group, and here's its neckline. Here's the head and shoulders pattern. Here's the neckline. And this pattern's been in for about 2 years now on Baba. So it took about 2 years to get to the peak here from this low back here in March of 2020. And here we are at the peak in November of 2021. So a little bit less than 2 years. And so we ought to see, a down move that's equal in time. So, this will last about a year and a half or so. And so the next 6 months ought to bring steadily, prices steadily marching lower. I mean, of course, there were some pretty large up moves in this down move right here. So yeah, I will be looking for timing an entry into a short trade, given the relative strength indices on the 1 minute and the 10 minute. And that's pretty much it. It's really what I've been concentrating on is the Qs, shorting the Qs, and finding good opportunities to short the Qs. Back here on the 28th of October, I was actually looking for opportunities to go long. I've been looking for opportunities since this point in October to go long. I got caught up in the sort of the fever, the bullish fever that was created after this. You see this reversal, this very large reversal candle that happened on the 13th of October. Well, it's looking to me like it's played out right there at 284, and now it's starting to come down. So yeah, it's bearish, definitely, and looking for opportunities to get more bearish. All right, let's see, the 10-year, 2-year here is looking, I accidentally opened something. Where'd it go? There it is. Let me get out of that. Yeah, the 10-year, 2-year spread. I don't know what's up with this big spike down, if you can see that on your screen. That didn't play out yesterday at all. It didn't, or today. I don't know what that big spike is. It's phony baloney. Maybe that's just a precursor for what's coming, for a further inversion of the yield curve. But yeah, the yield curve can stay inverted for a long time. And my internet again is acting very strange. Let's see. Okay, now it's coming back up again. Very weird. And so there's been, if we're down 35% now, once this yield curve starts to normalize again, I mean, you can count on another 50% down from where the yield curve starts to normalize again. So odd behavior, definitely very odd behavior. Very bearish. Bitcoin is doing a great job of holding up out here. I think that it has more downside value. And I'll see you at tomorrow morning's strategy session. I am out.